Look, I don't have much time for embellishments, so pay attention. Most of you are sleepwalking toward a financial cliff while applauding the latest technological breakthrough. In this video, my goal is to rekindle that spark of rationality that seems to have been smothered by the noise of social media and easy money. Success in life and business isn't about being a dazzling genius, but about persistently avoiding being a fool. If you think you can ignore valuation fundamentals just because someone put AI in a press release, you're practically asking for a painful lesson from the market. Reality doesn't conform to your expectations. It's your judgment that must conform to reality. In this analysis, I want you to abandon the notion that investing is an exciting pastime for leisure time. Investing is a rigorous discipline that requires an iron will and an insatiable curiosity about how the world truly works. I've seen people with PhDs in physics ruined because they couldn't control their envy or impatience. Here, we'll discuss why most of what you read today is intellectual garbage and how you can build a mental grid that allows you to sift the gold from the mud. If you're unwilling to do the work of thinking for yourself, you'd be better off handing your money over to an index fund and forgetting that stocks even exist. The foundation of everything I've learned in a century is brutal honesty with oneself. In this video, you'll see that I have no interest in selling you a magic formula. My formula is continuous learning and a disdain for moral mediocrity. The capitalist system is ruthless. It rewards genuine utility and punishes self-deception with terrifying efficiency. We're going to dissect why promises of infinite growth are often just the prelude to a violent contraction. If you want to survive what's coming, you must begin by understanding that your most valuable asset isn't your stock portfolio, but your ability to see things as they are, not as you wish they were. In this analysis, it's vital that you understand the difference between a company that makes things and a company that makes money. We're inundated with companies that boast about users, clicks, and media visibility, but lack a business model that can be sustained without venture capital funding. If an entity can't generate net cash after all its capital expenditures, it's not a business. It's an expensive experiment. AI risks becoming the most expensive experiment in history if we don't start demanding results that appear on the bottom line. Don't be seduced by technical complexity if the underlying economics are weak. Let's talk about social proof and why it's the opiate of mediocre investors. In this video, we observe how herd instinct overrides common sense. If all your friends are buying a stock and you feel like an idiot for not doing so, that feeling is your greatest danger. Rationality requires you to be able to stand alone in a corner while the rest of the world rushes in the opposite direction. Mental independence isn't an aesthetic stance, it's a mathematical necessity. If you do what everyone else does, you'll get the same results as everyone else, which are usually mediocre or disastrous at market peaks. The concept of margin of safety has been buried by today's greed, but in this analysis, we're going to unearth it. Paying 50 or 100 times earnings for a company, no matter how good it is a form of arrogance. You're assuming nothing will go wrong in the next 20 years, and in my 100 years of life, I guarantee you that something always does. You need to buy at such a discount that, even if management makes mistakes or the economy stagnates, your capital is protected. If there's no margin for error, there's no investment, there's a reckless gamble. Pay attention to the incentives of those who give you financial advice. This video highlights the need to be skeptical of TV analysts and fund managers who charge fees for moving your capital. They profit if you trade. We profit if we sit back and wait for an investment to grow. Never ask a butcher if you should eat meat. Seek advice from people whose incentives are aligned with the truth and long-term capital preservation, not with quarterly transaction volume. Transparency of incentives is the best filter for misinformation. The thinking inversion is the most powerful tool in my arsenal, and in this analysis, we'll apply it to technology. Instead of asking, "How can I make money with AI?" ask, "What is guaranteed to make me lose money with AI?" The answer is usually paying too much, and not understanding the technology, ignoring the competition, or using borrowed money. If you systematically avoid the paths that lead to failure, success often takes care of itself. It's much easier to be not stupid than to try to be brilliant. Eliminate the avoidable mistakes, and the rest of your financial life will become surprisingly simple. Consider the fragility of competitive advantages in the digital age. In this video, I warn you that what seems like an insurmountable moat today could be breached tomorrow by a new algorithm or a competitor with greater computing power. In the past, a candy brand or a local newspaper had moats that lasted for decades. Today, obsolescence is rapid. If a company's only advantage is its current technology, that advantage has an expiration date. Look for companies that use technology to reinforce an existing advantage in the real world, not companies whose only asset is a technology that anyone with enough capital can replicate. To close this section, consider intellectual reliability. In this analysis, I ask you to stop looking for shortcuts. There is no substitute for the hard work of reading reports, understanding human psychology, and studying the history of economic cycles. The world is designed to separate fools from their money, and insatiable curiosity is your only defense. If you are unwilling to be lifelong learners, the market will treat you as lifelong victims. Wisdom accumulates like compound interest, little by little, until it becomes an unstoppable force. Let's move on. Don't get distracted by the noise of breaking news. Real money is made with your head, not by frantically buying and selling with your fingers on a keyboard. We're going to delve into the part where the men are separated from the boys, the ethics of capital and the anatomy of a bubble. The ethics of management and the anatomy of collapse. Look, in this analysis, it's crucial that you observe the character of those who run the companies where you put your money. If a CEO is more concerned about the stock price tomorrow than the health of the business 10 years from now, run. I've seen many brilliant executives destroy century-old institutions because they wanted to collect a quarterly bonus, inflated with accounting tricks. In this video, the warning is clear. Integrity is an economic efficiency. A company run by honest people saves fortunes on audits, lawyers, and avoidable disasters. If you can't trust the person who signs the annual report, no matter how good the technology is, end that relationship immediately. Let's talk about how to spot a bubble before it bursts in your face. In this video, a familiar pattern emerges. When you see people who can't add 2 plus 2 giving you investment advice on complex technology, the end is near. Bubbles thrive on the suspension of disbelief. People stop asking, "How much is this worth?" and start asking, "Who will buy it from me for more tomorrow?" That's the dumbest theory at its finest. Rationality demands that you be the one asking about intrinsic value while everyone else fights over the crumbs of a party that's already over. The revenue circularity we mentioned isn't just an accounting error. It's a sign of systemic weakness. In this analysis, I want you to understand that if an industry's growth depends on its own participants lending money to each other to buy its products, the system is a house of cards. At Berkshire, we've always sought out companies that take money from the end consumer because they value the product, not because of a subsidy or cross-investment scheme. Transparency in the source of profits is what separates a real business from a pyramid scheme dressed up as high-tech. There's a perverse tendency to overcomplicate things to mask a lack of substance. In this video, I emphasize, if you can't understand a business model in 5 minutes, then the model is either flawed or someone is trying to scam you. Complexity is the den of charlatans. The best businesses I've owned, like Costco or See's Candies, are so simple that a schoolchild could explain why they make money. If you need a PhD in quantum computing to understand how an AI company will pay dividends in the future, that company probably never will. The risk of complacency and the power of humility. Complacency is the natural precursor to ruin. In this analysis, we observe that when things go well for a long time, people begin to believe that the risk has disappeared. That's when the most foolish decisions are made. Risk doesn't disappear. It merely lurks in the shadows and accumulates beneath the surface of euphoria. A sensible investor becomes more cautious the higher the market rises. Don't be seduced by your own past successes. Luck often masquerades as genius in bull markets. Keep your guard up and your skepticism intact. Let's talk about herd envy once again, because it's the engine that drives prices into madness. In this video, it becomes clear that watching a competitor make money with mediocre methods is the ultimate test for a rational person. If you can watch others get rich from bubbles and not feel the need to imitate them, you've won half the battle. Patience isn't just waiting, it's maintaining your judgment while everyone else loses it. Lasting wealth is built by systematically avoiding catastrophic mistakes, not by capturing every tiny market uptick. The importance of the circle of competence is absolute. In this analysis, I remind you that you don't need to have an opinion on every new technology. The world is full of things that fall into my too difficult category. I'm not ashamed to say, I don't know. What would be ashamed of me is losing my shareholders' money by pretending to understand something I don't. Know your limitations. A person who knows their limitations is far more dangerous to their competitors than someone who thinks they know everything. Intellectual humility is a massive competitive advantage. The perverse incentives in investment banking are designed to fleece you. This video discusses how tech company IPOs are structured so that founders and banks profit, while the retail investor is left with the risk. Never buy something that is being actively sold to you through aggressive marketing. The best investments don't need promotion. They are so obviously good that capital flows into them naturally. You learn to distinguish between a valuable asset and a financial product designed to generate fees. The discipline of saving is the foundation of all intellectual freedom. In this analysis, I tell you that if you don't have the discipline to spend less than you earn, you will never be free. Cash in hand is what gives you the power to say no to a bad deal and yes to a once-in-a-lifetime opportunity. Most people are slaves to their debts and, therefore, slaves to their jobs and the opinions of others. Intelligent frugality in your personal life translates into mental clarity in your professional life. Don't buy things you don't need to impress people you don't like. To close this section, think about the logic of investing. If what you're doing doesn't make sense from a common sense perspective, it won't make sense from a financial perspective either. In this video, I urge you to rediscover your capacity for skepticism. Progress is real, but so are bubbles. If you can remain rational while the rest of the world succumbs to fantasy, you will not only survive, but thrive when reality sets in again. Compound interest is your best friend, but only if you don't derail it with avoidable foolishness. The Lollapalooza effect and wealth management. One of the most important ideas I've tried to convey is the Lollapalooza effect. In this analysis, you must understand that when 3 or 4 psychological biases act in the same direction, the result isn't linear, it's explosive. In the current bubble, we have envy, social proof, and confirmation bias fueled by algorithms that only show us what we want to see. In this video, the lesson is that when these forces converge, human rationality is crushed. If you're not aware that you're under the influence of a Lollapalooza, you'll be the victims of the next big correction. The only defense is to take a step back and analyze the system from the outside, with the detachment of someone who has nothing to prove to anyone. Let's talk about focusing your efforts. In this video, a truth emerges that business schools often ignore. Excessive diversification is for people who don't know what they're doing. If you find a great business with an impenetrable moat and honest management, don't buy a little bit. Buy as much as you can. Real success comes from betting big on the few free battery opportunities that life presents. Most investors dilute their intelligence across 50 mediocre companies and then wonder why their results are mediocre. Discipline is about waiting years to find the right opportunity and then having the courage to act decisively. Managing success is often more difficult than managing failure. In this analysis, I observe that many people, upon making a little money, become arrogant and believe they have cracked the code of the universe. That arrogance is the beginning of the end. At Berkshire, we have succeeded because we have never stopped considering ourselves students of reality. The moment you think you are a genius is the moment you stop looking at the risks. Maintain the humility of someone who knows the market can humble you at any moment. Fortune is fickle, but rationality is a compass that always points in the same direction. There's a dangerous trend toward style drift. In this video, I'm warning you not to change your strategy just because something else seems to be working better in the short term. If you're a value investor, don't become a tech speculator just because there's a bull market. Most people lose money because they jump from one strategy to another chasing the latest trend, and they always arrive just as the party's over. Stay in your lane. It's better to look boring and outdated while preserving your capital than to look trendy while destroying it by following a fad you don't understand. The linear projection fallacy is another deadly trap. In this analysis, we see analysts assuming that if a company grew by 20% last year, it will always do so. The world is cyclical and full of disruptions. In this video, I emphasize that growth has physical and economic limits. A company cannot grow faster than the entire planet's GDP forever. If your valuations depend on perpetual growth in a world of finite resources, you're buying into a fantasy. Learn to value businesses based on conservative scenarios, not the pipe dreams of Silicon Valley marketing departments. Reliability is the rarest asset in today's market. In this analysis, I urge you to seek out partners and managers you can trust implicitly. If you have to constantly monitor someone, they're not a good partner. At Berkshire, we operate with a system of mutual trust that saves immense amounts of friction and costs. Most businesses are paralyzed by red tape and mistrust. If you find an organization that operates with integrity and simplicity, you have a gem. Integrity isn't just a moral virtue, it's a competitive advantage that enables quick and sound decision-making. Let's talk about systems entropy. In this video, it becomes clear that anything not maintained deteriorates. Competitive advantages erode, corporate cultures become corrupted, and complacency sets in. Your job as investors is to constantly monitor whether your company's defensive moat is widening or narrowing. It's not enough to buy and forget. You have to buy and watch the fundamentals. If the moat is narrowing due to emerging technologies or poor management, you must have the composure to admit that the situation has changed and act accordingly. The importance of opportunity costs is key to all rational decision-making. In this analysis, I remind you that every dollar you put into a stupid investment is a dollar you won't be able to put into a great investment when it comes along. Don't feel obligated to invest just because you have cash on hand. Cash is a choice about the future. In this video, I suggest you get comfortable doing nothing for extended periods. Intelligent inactivity is one of the hardest skills to master, but it's what separates great investors from mere amateurs who need the dopamine rush of constant action. The authority bias will cost you fortunes if you don't control it. In this analysis, I'm telling you not to believe anything just because a man in an expensive suit or with a degree from a prestigious university says so. Many of the biggest follies in financial history have been validated by the brightest minds of their time. In this video, I urge you to verify the facts for yourselves. If the logic of an investment doesn't stand up to basic common sense scrutiny, it doesn't matter who recommends it. Independent judgment is your only shield against the collective follies that periodically plague the capitalist system. To wrap up this section, think about simplicity of execution. In this video, I emphasize that great results don't require complex systems. They require avoiding major mistakes. If you can stay out of debt, out of envy, and out of self-deception, you've already covered 90% of the road to success. The rest is just sitting back and waiting for compound interest to work its magic. Don't seek complexity where clarity is more effective. Wisdom is, ultimately, the ability to see the obvious before others and having the character to act on it. Legacy, old age, and final rectitude. I'm often looked at as if I were a still-breathing museum piece, with people wondering why I'm still reading annual reports at my age instead of relaxing on a beach. The answer is obvious to anyone who has eyes to see. Learning isn't a phase of life, it is life itself. If you stop exercising your mental model grid, your brain will become a swamp of biases and outdated memories. Intellectual retirement is the precursor to physical death. My legacy isn't accumulated wealth, but rather having demonstrated that one can succeed by being rational, honest, and remaining within the circle of competence for 8 consecutive decades. Let's talk about extreme objectivity, a discipline you must practice until it hurts. In this video, I urge you to be the executioners of your own most cherished ideas. If you discover that one of your certainties is false, celebrate it as if you've found a treasure, because you've just eliminated an error that was going to cost you dearly. Most people die protecting their mistakes out of sheer pride. I prefer to destroy my errors before they destroy me. The ability to change your mind in the face of evidence is the mark of a superior mind. Don't be guard dogs of your own opinions. Be scientists seeking the truth. There is a profound satisfaction in building systems that function autonomously and ethically. In this analysis, you will see that the goal should not be merely to accumulate wealth, but to create a structure, whether a business, a family, or a career, designed to withstand human folly. At Berkshire, we have created an environment where trust is the lubricant and rationality is the engine. If you can build a life based on these same principles, you will have won the game. Don't seek the approval of the masses. Seek the approval of the few people you respect who are wiser than you. I want you to think about thinking reversal one more time before we wrap up. If you want a healthy financial life, don't desperately chase wealth. Look for what causes people to go bankrupt: debt, unreliability, short-term thinking, envy, and avoid those things with religious zeal. In this video, my message is one of elimination. Cleanse your life of foolish behaviors, and what remains will, by definition, be quite decent. The simplicity of this approach is what makes it so powerful, even though most experts ignore it because they can't charge for such straightforward advice. The final wisdom, conclusion of a rational life. Looking back, I realize that my greatest competitive advantage hasn't been my IQ, but my unflappable temperament. In this analysis, I teach you that you can be a math genius, but if you panic when the market drops 20%, you become a burden to yourselves. Emotional control is the foundation of all prosperity. Don't let fluctuations in public opinion dictate your pulse. If your emotional stability depends on external factors, you are slaves to luck. Build your inner fortress on reason, and you will see that economic storms are merely opportunities for the wise. The economy is, ultimately, a reflection of human behavior under pressure. In this video, I always come back to the basics. Does this system encourage value creation, or is it just a redistribution of wealth from the naive to the shrewd? Avoid the latter. Systems that endure are those that offer real, honest utility. Don't be seduced by financial engineering that looks like magic. Magic in finance usually ends in fraud. Look for businesses that an idiot can run, because sooner or later an idiot will run it. If the model is sound, occasional human stupidity won't be able to destroy it. Envy is the most pointless sin in the human catalog, and in this analysis, I urge you to eradicate it from your character. Comparing yourself to others is a recipe for intellectual disaster. If someone earns money faster than you through dubious methods, let them. Their success doesn't invalidate your rational process. Discipline lies in cultivating your own garden and letting compound interest do the heavy lifting. If you can master your comparative impulses, you're already richer than any billionaire obsessed with what their rival in the next-door mansion owns. For those looking for a summary of my life philosophy, it boils down to this: be reliable, be curious, be rational, and be patient. There are no tricks. In this video, I've shown you that the world rewards those who prepare for opportunity long before it arises. Luck is what happens when preparation meets opportunity, but you must focus solely on preparation. Spend less than you earn, read more than you speak, and keep your circle of competence well defined. The rest is background noise designed to distract the weak. My time on this stage is drawing to a close, but the principles we have discussed are immutable. Gravity will not cease to function tomorrow, and incentives will continue to guide men toward virtue or toward the abyss. In this analysis, I have attempted to give you a map so that you do not become victims of your own biology. Do not follow the crowd, do not lie to yourselves, and never stop learning. If you manage to be just 1% less foolish each day, the accumulation of that wisdom will make you giants in a world of mental dwarfs. Rationality is a marathon, and the finish line is the peace of having lived with clarity. So there you have my perspective, distilled and unvarnished. Don't expect the world to give you anything for free. Expect the world to make you pay for every mistake you make. In closing, I've given you the tools to build a mental grid that will serve as both shield and sword. Now it's up to you to have the character to use it and not let it be lost to laziness. Go and seek the truth with an honesty that will frighten the mediocre. If you do this, I promise you that your life will have a solidity that others can only look upon in awe. It's been a pleasure. Now, I still have a few ideas to dismantle before the day is over.